presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak YouTube update for April 29, 2024. I'm Mo Ansari, President of Compak Asset Management. Thank you for joining me today. Let's start first of all. Make sure you subscribe to all the information that is available. It's all free. All you have to do is go to compak.com/media and sign up. You will get the weekly YouTube update, you'll get the weekly podcast, you'll get the weekly newsletter, you'll get all of the announcements whenever we're doing seminars, webinars. Everything is all right there and it is all free. All you have to do is go to compak.com/media and sign up. Let's go and take a look at the markets last week. Good week for the markets, bounced back up. Market was up, S&P up 2.68%, small cap up 2.80%, and the NASDAQ had a great week, up 4.23% for the week. So I was expecting this fourth wave bounce, as I've talked about. Wave 1 to the downside, 2 up, 3 down, 4 up, 5 down. So we're in the fourth wave now. Usually, as you've heard me talk about for the last couple of weeks, they are choppy. They go back and forth for a period of time, and that's what I expect. Last week, we did get a lot of data, and that was sort of showed the economy not doing as well. First quarter GDP estimates came in at 1.6, expectation was 2.4, nearly a whole percentage point lower, which is a big slowdown in the economy. But at the same time, we got the PCE, which is the Personal Consumption Expenditures Index. That's the index, the inflation index that the Fed looks at, and it was stronger than expected. So now the Fed is stuck between a slow economy and higher inflation. I think as the economy slows, the unemployment number starts to go up, we get a little bit of loosening in the employment, and we get a slowdown. The Fed will finally, as I've said, my expectation is 2 to 3 cuts before the end of the year. I think we're still there. I know we were at 7 cuts, no cuts, interest rate increases, market goes from one extreme to the other, but I think we are at a point where we are at an inflection point in the economy. The Fed has to be careful not to keep the foot on the brake too long, otherwise we lose total momentum and the economy grinds to a halt. That's what they do not want. At the same time, they don't want to put too much stimulus in the economy. As Javed has said on the weekly podcast, he's talked about that a lot. The first sign that the Fed is going to be loosening up a little bit is cutting back on QT, that's quantitative tightening. If you don't know what that is, tune into the podcast and we talk about it in detail. Looking at the oil market, it was, compared to last year, it is still up quite a bit, but there are signs that there might be some movement in getting a ceasefire in Gaza. And if we do get a ceasefire in Gaza, that would be very positive overall. And I think if we do get more aid going to Ukraine, that might coax the Russians to the bargaining table. And I think Ukraine is at a point now where they might bargain and start talking for a diplomatic solution to the war. That's the situation. Interest rates also higher. I've talked about that 4.7 as the number to watch on the 10-year. We got to 4.74 last week, but then we came back down, closed at 4.67. So we are right there, and today we are lower. Rates were still up last week, but not as much. We're at a critical point where we are at the 200-day moving average and the 50-day moving average, and I'll talk about that when I take a look at the charts. Looking at economic data, we have the PMI coming out tomorrow. We have the ISM index for April. That's going to be, if it's above 50, that's going to be something to watch very carefully and something to see where we are right now. Looking at the construction spending, that comes out also. We're looking at and a lot of car sales. We've got initial claims for unemployment. We've got non-farm productivity. We've got factory orders. The big one will be the unemployment data that comes out on Friday morning at 5:30 Pacific time. So that's the one to watch. If we see some weakness in the market and we don't get the 200,000 that is expected, I think that could be the sign that the final piece, which is always the last piece, is unemployment starting to move. And I think that'll prompt the Fed to start looking at where and when they're going to cut interest rates. Looking at the technicals, we are right at the 50-day moving average. That's right here, the blue line, and you can see today we made a high of 51.23. 51.22 is the 50-day moving average. This was wave 4 that we were in, and we should see wave 5. Now I've projected from this top to here, which is 53.10 to 53.40 is my target for the 5th wave. But usually we see these ABCs that you see, A, B, C. I think this might be A, this might be B, and then we could see another C wave to the downside before we start heading back up. So we've got some time here. Usually May, June, July are weak, but we could see the market go right through the 50-day moving average, as I mentioned last week, and if it does, we're right at that resistance area today. We hit it at 123, and then we backed off from there. So this could be the short-term top, then we get another decline, and then we finally start the 5th wave to the upside. So that's the way I'm looking at the charts right now, and we'll have to wait and see how it plays out. Looking at the weekly chart, again, the 20-week moving average, you can see it's 50.09. We came and tested it. Last couple of weeks, we touched this red line. Now we're over here. Target again from this projection, short-term target, is 53.10 to 53.40. That's another about 200 points higher than where we are today. NASDAQ bounced, this is wave 1, 2, 3. We're in wave 4, again, right at the 50-day moving average. Today's high was 1621. 1653 is the 20-day moving average. Came and kissed it. Again, we could see this as wave 4 and then wave 5 to the downside, but we've lost a lot of downside momentum, so we might not, this gap is something we have to watch on the downside if it gets filled or not. Same thing with the weekly charts on the NASDAQ. Came down, got below the 20-week moving average for a couple of weeks, and now we bounced back up. Target still 17.1 to 17.7 on the long-term target that I projected from this high that we made in 2021. So it was a long-term target 2 years ago. We put this out, and that's what the projections are. 10-year note, this is the critical number right here. This, between this and this right here, is something to watch. We got there and did not fill it, which is a good sign. This is resistance, and it held. So now we're turned back down. 4.54 is something to watch. That's the 20-day on the yield. We're at 4.62 today, right now, as I'm doing this update. So I think if we can get below this 4.54, that would be the high. But I think we still have one more move to the upside in rates, one more move to the downside in the market, but that will be the opportunity to position. Oil down again big. 81.73 is the 50-week moving average. We're at 82.40 today as a low, trading at 82.66 right now. Again, 3rd wave up right here, 4th wave down right here, and then we have a 5th wave target of right here. So we could see something happen that pushes rates up one more time, pushes the market down one more time, oil up one more time. We'll have to wait how this all plays out over the next couple of months. As I've said, be patient. Don't be too anxious. Gradually get, if you have some cash, gradually put into the market over the next couple of months as you see opportunities. Small caps came down to the close to the 200-day, bounced back up. 202 is the number to watch. That's the 50-day moving average. We got as high as 200.5 today, trading at about 200 this morning. Again, wave 1, 2, 3, 4 back to the upside, and then we get another 5th wave down, which could bring us down to the 200-day. If we do get there, I think it's an opportunity to add some small caps if you don't have those in your portfolio. Gold market, again, 3rd wave top, 4th wave down, just below the 20-day moving average, which is 23, not 53, 23.56 is where we're at. Then much more bigger resistance at 2021. So we'll have to wait and watch and see how that plays out. I still think, again, one more move to the upside in gold is still possible. Again, to get all of these updates absolutely free, just go to compak.com/media. If you want the weekly one-page newsletter with the most important chart of the week, that is also free. You'll get it. just go to compak.com/media and sign up. If you want our help to figure out where your portfolio should be, if you've listened to me for the last 40 years on the radio and this, and you need help, not something that's a sales story for annuity or anything like that, a solid plan to get you from where you are now to where you want to go financially, drop us an email. Go to invest@compak.com. We will be in touch with you. Set up an appointment, no cost or obligation, and we will show you what we do and how we are different. Have a wonderful week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.